President Trump is now considering getting rid of the income tax. He said that instead of taxing our citizens to enrich foreign nations, we should be tariffing and taxing foreign nations to enrich our citizens. At first, I kind of thought this was a joke, but Congress is taking it seriously. The Fair Tax Act of 2025 was a bill proposed which would effectively abolish the IRS. And if you still don't believe me, let me read you one sentence from the bill's press release. The fair tax was also to eliminate the need for the Internal Revenue Service. Now you are probably wondering, if the government decides to cancel your income tax, how do they get money? Which might explain why Trump has also been working to create the ERS, the External Revenue Service, as a new entity to collect tariffs. That's why in this video, I want to talk about taxes not from a political perspective, but from a financial perspective. Because I can tell you that taxes are very confusing and they might get even more confusing. And so I want to break this down by talking about three things. Number one, I want you to really understand how our tax system works today so that we can understand how tariffs flow into it. Number two, I want to talk about tariffs as a potential replacement for the income tax and what that looks like. Is it possible? Number three, I want to talk about what would be the consequence of that to the inflation problem. Will it make it worse or not? This is why I want you to really stick with me till the end, because I think it'll really help you understand the entire big picture and how the government collects this tax revenue and spends your tax money. Now, you might think that if the government collects $100 in taxes, they can only spend $100 because that's all they have. This is not true because the government spends money that they don't have. What they do is that they borrow money, spend it, then wait for your taxes to pay their debt. This is why we are seeing a record high amount of national debt today. What exactly do you pay when you pay taxes? Here's a rough list of 10 different buckets of taxes that you might be paying when you pay taxes. Income taxes. These are taxes that you pay when you go to work to make money. Well, some of that money goes to the government in the form of income taxes. Because you just got paid, the government wants their fair share. Number two is payroll taxes. Payroll taxes are paid on top of your income taxes, because when you get a salary, you have to pay FICA taxes, which is the Federal Insurance Contributions Act. It's a United States federal payroll tax payable by both employees and employers to fund Social Security and Medicare, federal programs that provide benefits for retirees, people with disabilities, and children of deceased workers. If you're self-employed, you have to pay both ends of it because you pay double the payroll taxes and your income taxes. Number three is capital gains taxes, which is the tax on profits realized on the sale of a non-inventory asset. The most common capital gains are realized from the sale of stocks, bonds, precious metals, real estate, and property. If you go out and buy a stock of Tesla and you sell it for profit, you must pay taxes on that. That's called capital gains taxes. Number four are corporate taxes, which is a type of direct tax levied on the income or capital of corporations. If you run a corporation like Apple and you make profits, the corporation has to pay taxes in addition. Number five are property taxes. When you buy a house, you got to pay taxes every year. This is called your property tax. Number six is called your estate tax. This is a tax to give you the right to transfer property at your death, also known as your death tax, which is when you die. If you pass money down to your kids, you have to pay taxes on that. Not everybody's going to have to pay these taxes. This is just reserved for the wealthy. As of 2025, the limit is you have to pass down more than $11.99 million before you have to worry about this estate tax. So if you're passing down huge sums of wealth, you also have to worry about this estate or death tax. Number seven are sales taxes. When you go to the store and buy things, you have got to pay sales taxes. Number eight are sin taxes. A sin tax is an excise tax specifically levied on certain goods deemed harmful to society and individuals, such as alcohol, tobacco, drugs, candy, soft drinks, fast foods, coffee, sugar, gambling, and pornography. These are taxes put on things the government doesn't like, and they'll put a tax on it as a way for the government to make some more money. Number nine are tariffs. A tariff is a tax levied by the U.S. government on the value of imported products, including freight and insurance. I'm going to go deeper into tariffs. Number 10 are others. These are taxes, for example, toll taxes, hotel taxes, and so on. What President Trump is trying to propose is, hey, let's take this category number 1, income tax, which everybody who has a job has to worry about. Let's get rid of it, and let's replace that by increasing this category number 9 tax right here, the tariffs from goods from other countries. In 2024, the IRS collected about $5.1 trillion in income taxes. And then, out of that $5.1 trillion, the IRS had to pay back a little bit over $500 billion in the form of tax refunds and credits. So, let's just say that the government collected around $4.5 trillion in the form of income taxes. This is almost half of the government's total income from all taxes. Now, I know I'm just a random guy, but I did some basic math. If you want to get rid of the income tax, I think that you'd have to collect an additional $4.5 trillion in the form of tariffs in order to replace that. According to the United States Customs and Border Protection website, there were about $3.35 trillion of goods imported into the United States in 2022. This earned the government around $11 billion in tariffs. Now, I know that was based on 2022 numbers, but that's the best data that we have from the government agencies. If we look at the 2022 numbers, that means in theory, the government would have to impose something like a 130% tariff on all imported goods into the United States in order to generate $4.5 trillion based on the $3 trillion or so that was brought in or imported into the United States in 2022. This doesn't seem very feasible, not to mention the fact that the goal of tariffs is to bring some manufacturing back to the United States. Therefore, if we slap on big tariffs and some more manufacturing comes back into the United States, we might have even less imported goods because fewer goods are being made overseas. If fewer goods are being made overseas and more goods are being made here, then fewer goods are being imported, which means less tariffs are being collected. So based on the 2022 numbers, to just rely on tariffs to offset the income tax seems very difficult unless, of course, the government cuts down their spending. Part of the reason why the government needs such high income taxes is because they spend a lot of money, more than they even have. So maybe the government could cut back on their expenses drastically. Then they could generate fewer dollars from tariffs to eliminate the income tax and still be okay. It therefore becomes a little bit difficult and very unlikely that tariffs would serve as a complete replacement for the income tax. Maybe you could use tariffs as a way to potentially reduce income taxes, but completely replacing the income taxes just based on the numbers that we have today doesn't seem very likely. Trump's first term in 2018, he passed a 25% tariff on steel entering the United States, and the question ultimately is, then what happened to the price of steel after those tariffs were imposed? When steel tariffs were passed in March of 2018, steel prices went up a little bit until September 2018, but then after that, steel prices fell, and they actually became cheaper than where they were before the tariffs until the pandemic hit, and then steel prices skyrocketed. This is why there's so much uncertainty as to what's going to happen with inflation if and when tariffs get passed. Tariffs could make the prices of things go up. We also don't know what retaliation we would see. Trump's first term in 2018, he passed a 25% tariff on steel entering the United States, and the question ultimately is, then what happened to the price of steel after those tariffs were imposed? When steel tariffs were passed in March of 2018, steel prices went up a little bit until September 2018, but then after that, steel prices fell, and they actually became cheaper than where they were before the tariffs until the pandemic hit, and then steel prices skyrocketed. This is why there's so much uncertainty as to what's going to happen with inflation if and when tariffs get passed. Tariffs could make the prices of things go up. We also don't know what retaliation we would see. Therefore, do not get caught up in the emotion. Whether you are a Democrat or a Republican, the goal is to understand money and how our economic system works.